You just need to sort of consolidate here, Chris. So normally when you sort of get a come off like this hard here, normally maybe you might try and rally a couple of weeks, maybe you consolidate for a couple of weeks. You've just got to try and hold this low here and then go there. So it is a pretty market got pretty oversold pretty quickly there. We do have some history of long tails. Saying out Aussie market, we've got a history of panicking. Still got banks pretty expensive. Resources probably now looking kind of a bit more value there. So it's interesting. They're sort of running counterintuitive at the moment. So you see it obviously talk about property and healthcare names starting to improve here. So still seeing rotation through the market through some segments up and down here. So still think you might see a bit more of that activity go on there. A little more speculative chart is that what they call that accumulation cylinder, where you sort of see price sort of widen a little bit, but you're just seeing a series of high lows before you see price sort of take off here.
With a wild ride on the markets in the last week and a pullback that was more than what we'd expected in the US election year cycles, we checked to see how this impacts the market outlook, how the cycles are reflecting what's going on, as well as the trading opportunities and companies that are building bases right now. We're looking at Gary Glover's weekly report, and the one to guide us through is the man himself. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
It's good to hear that you're doing well. The markets have been rocking around, came down quite heavily, rebounded somewhat. The Aussie seemed to close the week a little bit heavier, but that might have been just relative to where we started Monday and Friday and where we closed, being on the other side of the world. So when you look at the NASDAQ, it roared out, it broke outside of that wedge up to the top side, hit the 138.2, which she signaled as being a bit of a magnet on the Fibonacci levels as coming towards, and then got belted way back down. There's a little circle below. You're still looking for that to be a point of gravity, or maybe you look for it to come back into the range. What happens from here?
Look, I think it's it's come back a lot bit further than we probably expected there. I think around about 8%, probably the norm for election years. So the first correction there was around 8%. This one's a bit larger there, probably about 9.5 somewhere. So it's definitely larger there. I guess the key thing there is that it has held the previous swing low, so that April low. So that's the positive. It definitely had a pretty strong reversal into that low as well, just sort of getting pretty oversold there. So can kind of finishing back above that sort of old high there is pretty important as well. So those are the positive things there. Just come back a little bit deeper than expected. There is a little bit of negative there, but you just need to sort of consolidate here, Chris. So normally when you sort of get a come off like this hard here, normally maybe you might try and rally a couple of weeks, maybe you consolidate for a couple of weeks. You've just got to try and hold this low here and then go there. So it is a pretty, market got pretty oversold pretty quickly there. So it's come back in the right sort of time window now. It's almost eerie sort of the days of the high and days of the low in terms of those sort of old 60-year cycles and stuff. So has sort of followed that path. They just probably come back a little deeper. I think the 60-year cycle came back, just sat on top of the previous high and then sort of built again. They'd sort of churn around for a lot of August, and then really sort of from late August, I think sort of through to October, they had a pretty strong run, and you tend to get a little bit of uncertainty into the US election window. So that sort of first week of Nov, you might see a little bit of weakness into the end of October as well. And markets, typically sort of finish the year pretty strong. So it doesn't matter who gets elected. Normally markets tend to bounce post US election. So that's the sort of normal sort of pattern there that we normally see here. So, but yeah, look, got the small negative that it's been a bit larger than normal. But yeah, I think we'll just, as long as it sort of can hold here in the next sort of few weeks there, I think it sort of still bodes well for in like another year in the year sort of move here. But just slightly negative that it has come back there. What that means to me is that maybe this is going to be like an overlapping sort of top maybe at the end of the year. So maybe not going to be as strong as the 60 year we set on top there. Maybe it'll be overlapping in nature. So maybe a little bit more volatile. Which doesn't make it easy to trade and stuff there. But yeah, but that volatility, to be honest, that volatility is a little bit more present in high inflationary periods in the past. So, until inflation really sort of, until that sort of now gets sort of up in the head there, maybe markets are going to be a little bit more volatile and all.
Right. So we're looking at that volatility. We also want to understand what's happening in the S&P 500. Is that possibly more volatile than normal? We still have the same inflationary overarching macroeconomic conditions impacting the S&P 500, just a different composition. And looking at the chart side, same thing. You looked at those fib levels, 161.8, like a magnet, it drilled up towards the highs, touched it, got over it, and then reversed. The reversal, the same thing. You talk about a strong end to that week, opening low, closing high, and closing above the previous swing high and being above the previous swing low. Is it more important for the S&P 500 or somewhat similar?
Yeah, pretty similar there. I mean, I guess the only difference is obviously, it's, like the XJO likes to expand, and contract like 50% of the range. We'll tend to sort of go to 50% more and then we'll pull back to the 50% level as well. Whereas the S&P has just got some awesome history at the 161.8. So that was definitely a big level for the S&P 500, that 161.8. So that's probably more sort of pertinent that has better resistance there. Again, we've just probably had a bit of a bigger pullback than you'd like here, but we can sort of, if you look at sort of previous trends in the past, even the ones that don't sort of sit on top and be really explosive, as long as they keep holding those sort of swing lows there. So basically, just keep making high lows here. So you can still sort of go high here, but it does sort of show that it's not going to be ultra strong, as in like a trend that sort of sits on top of each other. That's when you can really accelerate and get really something really aggressive. So, and it is, maybe, there's definitely segments of the market that are probably a bit expensive, and other segments that have still got some value there. So it maybe does sort of suit the climate a bit as well. Still got a few, bit of inflation lingering, a few other issues there. Maybe, some questions around recession or soft landing and stuff there. But, the thing too is you can imagine here, Chris, that obviously, if the US does get inflation under control, then sometime soon we're going to see, a rate cut in states there. So I think you'll see Bank of Canada and the UK basically already sort of cut rates. So, if the Fed goes into a bit of even just one rate cut, the market will take that pretty sweetly. They'll be pretty positive for growth stocks as well. So if you sort of start to see a cut or two in there. So that's why I think we've still got the legs here, but maybe just going to be a bit overlapping in nature rather than super strong here.
Okay, so overlapping nature, not so super strong.
But it does need to hold. I guess the reality is that US market does need to hold here. So I think, normally when you get a big sell-off like this, normally there's a bit of an absorption period as well. So I just think 2 or 3 weeks of sort of trying to hold around this period here. So, everyone's talking about a retest, but that worries me because everyone's talking about it. But I think you just need to see a bit more time here. So I think you'll see price tighten up here. What we want to see is maybe a couple of weeks of actually absorbing that wide range without actually sort of selling off here. So I think maybe a 1 or 2 weeks of pretty dull activity, more sideways orientation, even sort of slightly down to the side of that would be the ideal setup here. So you want to sort of see a couple of weeks, market pulling back, not pull back much, stay pretty tight in the range, see volumes quite low. That's probably the ideal setup.
Okay, well, we've definitely had overlapping markets in the Aussie. So S&P 500, look at that, we've just got higher lows. That's great. Trending market, overlapping in nature. You said we like the 50s, which is a Fibonacci level, not currently on this chart, but we haven't really got to those. We've had this congestion period. We're now getting used to this zoomed in chart because we, off the side of the chart to the left, we've lost that massive rally and we've got sort of this sideways congestion. Is it different for the Aussie market because we've come into this sideways congestion? We had that massive probe down. We did recover somewhat throughout the week, still closed down as opposed to the US that closed up for the week. We've got a black candle. Theirs is white, red, green, however you want to look at it. Does that change what happens in the Aussie and your outlook for what we have in Australia?
Yeah, look, the reality is we broke that top high. Probably one of the last indices to actually break to get a new high. So on, sort of lagging, most other sort of indices. Did have a bit of a move there. The whole thing tightened up, and then we got a bit of a breakout there, which they look pretty positive. But now we're sort of didn't quite get to sort of 8,200. Has sort of failed here, but all it's done here, Chris, is just come back and retest that break zone now. So you can see where it's bounced off of that, So we do have some history of long tails. Saying out Aussie market, we've got a history of panicking. So if you go back and look, through the all orderings and go back and look historically, you'll see long tails everywhere. I can see them just on this chart here. See, 2022, we got long tails there. We got mid-year long tail. We got early 23 another long tail. Just I don't know. Probably because we're open while everyone else is closed. Might have sort of something to do with that. But yeah, just anything was sort of come off there. Look, we've seen clear signs of buying the dips previously. Did get going there, but has been rejected. So we did see a little bit of selling into that sort of high there around just above 8,100. But yeah, look, we might just sort of come back, absorb that. So I think as long as we sort of hold that oil support zone, that's probably kind of constructive there. So I think for the Aussie market there, you probably just want to sort of see some absorption there, sort of markets hold that high here. So it's pretty interesting. The undercurrent market is that the banks have now had a bit of a correction after being super expensive, having a bit of a hit, but it's still pretty pricey. Whereas you've got resources, commodities, they're sort of probably had a pretty, they're all on the nose here at the moment. They've had a pretty strong move down here. So still got banks pretty expensive. Resources probably now looking kind of a bit more value there. So it's anything they're sort of running counterintuitive at the moment. So you see it obviously talk about property and healthcare names starting to improve here. So still seeing rotation through the market through some segments up and down here. So still think you might see a bit more of that activity go on there. So there'll be some sectors that are up and down here, but probably just important for our market to sort of kind of absorb this low here, hold this low here. But I think after a move like this, you normally sort of, I expect the next 2 or 3 weeks just to be a bit dull here. And just want to sort of see, just price sort of hold and kind of build here.
Okay, so if we see that'd work out really well. The other one is the Dow Jones, somewhat more similar to the ASX in the sense of the value side that we have seen for the last couple of years. But like you said before, the Aussie was one of the last to break out through the highs. The Dow Jones did it sort of earlier, but then petered off into this congestion. Now, as terms of the pullback, yes, it did sort of shoot out the top and come back into it, but it barely got below that range and definitely maintained the swing low, but looks very different to how it maintained the swing low. Could this be a leader in how it's set up, or how do you look at it versus, say, the NASDAQ or the S&P as an indice and how it could come out of this movement?
Yeah, it's funny. It's that sort of overlapping top there is normally a bit bearish there. But the fact that we overshot it so hard there, and then come back in the range there, that sort of, for me, it takes a little bit of the bearish edge off it. And now we're sort of overshot a little bit on the downside there and recovered again here. So just sort of kind of, cancelling out this sort of setup in some regards here, but just might be a little bit overlapping to the end of the year. I just sort of think it's sort of still, it's, I guess, a bit neutral there on the Dow there. But amazing there. It really shown relative strength there, Chris, against the other indices. We haven't had that much of a pullback there. It's still got a series of high lows in place as well. So, potentially this sort of keeps us sort of climbing here, but it does probably hint at more of a sort of sideways to sort of maybe a slow uptrend moving trend there rather than, we've seen in the past that sometimes they can just sort of, grind overlap to, to near highs for a while. So, this might be the way it plays out toward the end of the year. So positive, but probably just, not super explosive sort of action there. So you might just sort of see overlapping action there to the end of the year. So that's why we're probably just going to see rotation continue there. Some sectors up, some sectors down here.
Okay, so overlapping in rotation towards the end of the year. we want to look at trading shares. We want to look at trading opportunities on the ASX. You mentioned earlier that resources may still be showing that value. So, but first off, we'll look at Credit Corp being the next one on the list. So Credit Corp, definitely not the resources side, but we're looking at that more value side of things. You've got 0, 1, 2, 3 marks on the chart, 0, 1, 2, 3. So would you be looking at this as a larger cap company that could show more strength if that rotation and those setups that you're looking for occur? And if so, what would you like to see from Credit Corp?
Yeah, so we do have that basing pattern there, Chris, sort of, consecutive sort of high lows building there. And we saw that earlier, or sort of late last year, had that sort of, I guess it's referred to as sort of Livermore's speculative chart. Is that what they call that accumulation cylinder, where you sort of see price sort of widen a little bit, but you're just seeing a series of high lows before you see price sort of take off here. What I also like here, Credit Corp, Chris, is that they did update there last week, and the market was up. That pretty strong day was the day that reported. There's a really, I know sort of, the copper report, they talks about this quite a bit, is that if you look back and look historically at how companies trade on the day they reported, is a really strong correlation with how they trade over the next sort of 3 to 4 months. So, something like it might be something 82, 83% of those stocks that are up on the reporting date tend to be up, continue moving up here over the next sort of 3 or 4 months there. So just a pretty good guide there in terms of so don't worry about sort of whether it's a beat or a miss is sort of what the data suggests. It sort of just sort of suggests what was the market expecting here. And I think the market was probably a little bit worried about Credit Corp. I noticed that in the Credit Corp they talked about the 2025 pipeline being pretty strong, pretty robust already. That sort of bodes well for the future there. So I just think it technically looks like a good pattern here. The update was pretty positive there, so I think this is sort of one that has been pretty well managed company in the past. Obviously, just with all the free money given out here and COVID and stuff there, it's sort of worked against Credit Corp. But it just does look like the cycle might have changed to the positive for CCP, a bit like maybe the healthcare as well, coming out the other end. So yeah, I just think this is definitely a good one there. I think most of the broker targets are around 19.50 to sort of 20.50 as well. So most of them up around $20 there. So I think this looks pretty solid there. I think it will just sort of build quite nicely from here.
Okay, well, different space, Domain Holdings Group. Well, we've seen REA work really well. We've got 0, 1, 2, 3 on this chart. We've seen property prices shoot the lights out throughout that whole COVID period. They did do well, but this chart shows more so the daily in the last year or so, which has had that solid downward movement.
Yeah.
But now we've got 0, 1, 2, 3. Could this be enough? Would you want to see a break of this high? Would you enter earlier? How would you trade this 0, 1, 2, 3 setup in DHG?
Two things I like here is that breaking that down channel. It's been running for quite some time here. That's a good sign there. So it broke out of that channel, come back for a retest of that channel, which is sort of classic sort of stuff. And we do have that sort of, 3 higher lows as well building there. So it does have that sort of accumulation sort of cylinder sort of style here. So I think the volume's been pretty robust there. REA have updated here recently, pretty solid results. So it does bode well for the Domain here. I think Domain reports at the end of the week here. So got a little bit of risk coming into reporting zone there, but does sort of does look quite good here.
Okay, so reporting season we're still in the thick of it, that's for sure of it. Mineral Resources, MIN is the next on the chart. So MIN, you were talking about resources mentioned Rio earlier. We want to know, well, is there still value in these companies, or are they just being beaten up for a reason and we should still give them a wide berth, or is there a glimmer of hope coming through in the charting formations that we're seeing currently?
Yeah, look, watching these closely there, obviously I thought we might have sort of come down to a bit of a false break there, but it never really got going after it went to a new low. Didn't sort of stay sort of, I think there wasn't too much follow through there, but it has sort of tightened up here again. But, the volumes are sort of tapered off too, as it's sort of gotten lower and lower here. Volumes have sort of gotten lower and lower, so it does seem to be less aggressive selling in here, but at the end of the day, we do have a downtrend there, Chris, as well. That's probably the negative there. I think what you want to sort of see here is probably a bit of a pop out of the range, and then maybe it'll come back. And I know sort of mineral resources tend to sort of to come back and make a higher low or even second higher low before it gets going here. So, but yeah, it just looks pretty interesting here. It looks sort of looking a bit oversold, but I mean, look, the trend is still, most of these stocks here have probably come back a lot further than I thought they would. And we know this market here that stocks that have sort of been running hot and probably overvalued, they continue to keep running and get more overvalued. And the stocks that are probably sort of sold off here are looking pretty undervalued. They've continued to keep getting more undervalued. So it's a weird sort of, you don't normally sort of see that disconnect in markets there. You normally sort of see sort of more normal markets, you sort of see them sort of trade in their historical price bands, even some of the majors, where it's, there's no way I would have, ever expected CBA to be trading 24.5 times. If you look at the last 10 or 15 years in trading activity, it just doesn't happen there. And then you've seen plenty of other stocks as well. Like, I mean, you can point to some of the travel stocks at the moment. They're probably trading at half the multiples that they were trading, pre-COVID. So, you wouldn't have thought they'd be trading at half the multiples, from some of those stocks as well. So, there's some weird behaviour in there. Obviously, like the mining can be a bit more cyclical. You can get those sort of stocks can trade on, lower multiples. But yeah, it's hard there because you're sort of oftentimes when the resources look the cheapest on the multiples and the yields, that's usually top of the cycle as well. That's usually when you should be sort of behind them. So it's probably when they're not so when they look probably maybe a bit more expensive, that they're undersold here. That's when they probably are often the best as well. That's sort of the earnings cycle as well. So just interesting dynamics there, but definitely some of these resource stocks are definitely sort of tightening up here, coiling up here, looking a bit oversold there, but just got to be careful to jump in a bit early here. I think, in the past I probably would have jumped into these here, but I'm just holding off here just because they just seem to be coming back a bit further than they normally would.
Well, as you mentioned about the multiples and the times to buy and sell resources, you might recall reading, there was a paper a little while ago about capital raisings for Australia's largest miners. And it's almost quite often you'll see in the cycle or on a weekly, they do the capital raisings at this part of the phase and they do the buybacks at this part of the phase.
Yeah.
And there's been more than once, but BHP is an interesting study if anyone wants to look at that.
Most of the banks have got buybacks on at the moment, Chris, as well. 24 times and 16 times and 17 times and 15 times. So, it's probably not a good omen.
There's a bit of an indicator in that sometimes. But we digress. We'll go back to the mining companies because you've got mineral resources, but you've also got South 32. And this did gap down monumentally, huge gap down, big volume in that huge phase. But then there's a bit more accumulation happening here after the volume sort of died off in that rally that didn't really follow through, came down, undercut the lows that we saw in the late part of July to where we are in August. We haven't quite undercut the 0.123 we had in February, March before that nice rally from sort of the $2.90 to the $4 range. So if we're this close to a previous low, a 0.123, would you be looking for a false break as a bit of a magnet and sort of help you support and have conviction that a false break happens and maybe we go up for a false break on the other side?
Yeah, possibly there, but could see a false break. But they're coming back. Like I think a lot of them are either coming back marginally lower, or they're pulling up just shy here, which obviously this one's just shy of the low there. So, look, the triangle there is interesting. There, it's probably not the most clean triangle there, but we have seen elevated volumes there, Chris, down to that low as well. And this one here is obviously it does have an asset sale in there as well. So that's going to come back either in the form of some dividends or or probably large buyback as well. So it might come back in a few different forms there. So just be interesting. This one here, it's obviously it had a pretty strong run up into the highs, come all the way back down again. But but yeah, it does highlight the sort of volatile nature of the sort of current market there for a lot of these commodities as well. But yeah, it just looks pretty interesting here at the moment. It could be a spot where we might see a bit of a bounce there from it. Has come down at a bit of a clean, fine wave structure as well. But just interesting there, the volume sort of is up here, down at the low here. So that does look like signs of accumulation to me. But yeah, you probably definitely want to hold that low there. So maybe we'll see a bit of a bounce here. Maybe if it comes back and maybe sets up a first high low, that's probably the safer way to play it. But they do look, interesting here. Definitely, the whole sector's probably, pretty oversold here. But yeah, we also do know that they can potentially get a bit more oversold too.
Okay, well, one last minor before we move into other parts of the market. You're talking volatility in mining. Fortescue can definitely deliver on both those fronts.
Yeah.
We got this sort of same triangle wedge happening here. Is that sort of attracting you to see companies in the similar sort of space, cutting lows, having similar patterns and possibly similar volume profiles to give you an indication that, hang on, there's a bit of commonality here, something's afoot?
Yeah, definitely got the same appearance as well. So it's a pretty strong downtrend there. So we are sort of, look, it is sort of picking a bottom, which is very dangerous. The two things I do like here is that sort of tightening up, that little triangular sort of pattern there. That the volume being up as well does sort of show signs of potential accumulation taking place there. The one thing you don't see on the chart, Chris, is if you highlight the high, that is kind of like the first week of February. And, look, like a lot of these cycles will sort of, like body cycles, so sometimes they do like a 144 cycle, otherwise they do like a half year or a 40-year cycle. So we have gone sort of 2 half-year cycles, so 2 quarter-year cycles into that low there. That's been basically sort of 6 months from that high as well. So I do look at sort of like 90 days and then 180 days. So a lot of the commodities are actually running in half years into these lows there. So it's been a fairly, it's been a 6 month correction for most of these big miners there. So it had a pretty deep pullback too. I mean, what are we, 30 down to 18? That's a fairly large correction there. So so it's pretty deep pullbacks there. Just a bit of timing here. Definitely got a bit of volume up here. So, but again, we sort of just got to be careful with some of these as well. They have, what I was sort of finding here is I'm getting some movement off these sort of timing lows there. Like they can fail as well. They might have an initial bounce and then they might come back and retest the low again. So, but yeah, just interesting now. I think, if you look at our market's, considering where all these big miners are, the market's held up pretty well.
Mm-hmm.
So, if the mining shares were to sort of have a bit of a bounce there, it could, potentially propel the market quite a bit higher here. So, I think that's pretty interesting as well, considering most of these stocks have had like 40, 50% corrections over the last 6 months. So some pretty deep pullbacks.
Well, we go from mining into the other space that you had said had relative performance. It was outstripping the market. Now, Helios, not shooting the lights out, but from a relative perspective, from May to where we are today, it's definitely higher. It did edge out this sort of basing pattern with a fair bit of overlapping lower lows, but then the false break. Now we're outside of that downward congestion, that's the triangle there, and we seem to be in some sort of compression or rectangle. So is this a constructive thing to see at this part of the chart?
Yeah, seeing some sort of strength in a lot of those names. So, like, I know sort of Sonic we've highlighted here recently, and sort of, I guess you'd say Cochlear and CSL have been pretty firm. I think Fisher Paykel's been pretty firm as well. Even sort of ResMed in that sort of healthcare space has been pretty firm as well. But what I like here is we have sort of, we've got that sort of broadening sort of bottom there where we sort of just keep sort of going marginally lower each time. Had that sort of third attempt at the lows there. So essentially have a false break here, but that rally out of that low there has broken that sort of ascending wedge pattern there. It had a pretty good sort of move on pretty good volume. And then sort of since then where we've just gone sideways there, a much lighter volume. The volumes have definitely sort of tapered off here. So it's a bit of a sort of sideways sort of consolidation here so far. So it is sort of constructed there. You'd probably like to sort of see it a bit more impulsive, a bit more aggressive there. I think obviously Sonic looks probably a little bit more robust there. But yeah, it does look sort of like a bit of a consolidation there. So normally when you go up impulsively and then sort of go sideways there, you normally break in favour of that trend there. So it does sort of bode well there. Just does need to sort of hold up a bit more. I would like to see it back above that 50 moving average there. But yeah, I think the price action does look kind of encouraging here.
Okay, so they're not quite the large caps that are doing really well, like CSL and Cochlear, but could have trading opportunities here. Australian Clinical Labs, another healthcare name showing strength as you fruition. Now, is this, we've got 0, false break, 1, 2, and then we've got 1, 2, 3. So you've got the lower lows that we're making our way down to, second low, third lower low. And then are we looking for 0, 1, 2, 3 on the way back out, or is this the false break that we saw down here? It's just
so a similar setup. Yeah, you're bang on right, Chris. You sort of got that sort of 3 marginal new lows there, which is sort of like that's how a lot of the sort of quarter, often referred to as a sort of broadening bottom there. We can sort of see that, sort of 3. You see that in peaks there, and you probably see it in resources more than anything else. But you see those 3 overlapping tops, and that's been rolled off there, and like a lot of lows come in as well. I mean, I think the Combank $24 low was a 3 marginal, 3 thrust low like this, broadening bottom, and then that was the GFC low, and then bang, So you often sort of see them on the bigger sort of setups here. So I like the fact that we've sort of now rallied above a bit of a swing high, had an impulsive move, and now we're sort of starting to sort of tighten up as well. So now we've sort of got a first higher low, maybe a second higher low building here. Price action starting to tighten up as well. And the volume's been sort of solid there on those rallies there, not too much on the pullbacks there. So it does look sort of constructive there. But yeah, this is sort of one that looks like it's sort of building quite nicely there in a sector which is sort of starting to get a bit of strength as well. So definitely sort of one to keep an eye on here as well. I think it looks pretty robust. But that definitely sort of looking for that bit more evidence of a low here, sort of like seeing sort of at least sort of 1 or 2 or hopefully sort of 3 high lows in there. It's interesting if you go back to that S32 chart there, did sort of cover it there, but that rally there that sort of went up to $4 there, that started with that 0, 1, 2, 3 pattern. That's that sort of accumulation cylinder again, Fritz, as well. That's the it's a really interesting sort of setup there, because then you sort of, oftentimes we sort of try to pick these lows, and then even if you do nail the low, you might be sort of sitting there for quite a while building. And I think, with ResMed there, we were able to sort of jag the low there, and it took 3 or 4 months to build. So if we just waited 3 or 4 months rather than trying to pick the low, even if we come in slightly higher, we haven't sort of spent the first 2 months sort of hanging around or doing much. As Minervini sort of says, sort of he wants to be in the market for as little as possible, but he wants to sort of try and capture the meat of the move there. That's probably that's the beauty of this sort of basing pattern, is if you do sort of start to get these sort of high lows in place there. You see at the moment, the one sector which is setting up all these at the moment is the property trusts. They've all got like 3 or 4 high lows here. So even though it's a bit boring, the property trusts there and probably low beta, they've all got pretty good setups here. And even today I've sort of saw Dexus pop up pretty aggressively. I've had a pretty good update. So again, these sort of stocks are probably, everyone's fearing the worst. It's and probably isn't as bad as everyone's expected, and they're starting to sort of pop here. So I think it's just a really interesting setup here in this market here. It's just sort of, because the market is sort of tending to overshoot both ways, if you wait for a little bit more of wait for that base to be built. I think sort of Stan Weinstein talks about the base being built as well a bit more. Probably a sort of safer time to be sort of coming in.
So I'm looking at charts and these notes that he's just sharing with us. The accumulation cylinder has obviously worked well. You've shown in the previous charts the indices and highlighted before where it has worked, and some possible setups that are happening right now for some Aussie companies. I'm going to take a stab and say, is that my key takeaway, or have you got another lesson that you're reflecting on this week? And
I think we just need to be patient with our setups here. I think if we're rather than trying to buy these sort of really deep lows. They might look, really undervalued there, some of these sort of stocks there. But I think if we patiently wait for maybe a few high lows to sort of set up there, kind of one, we're getting confirmation that there's a base build, and two, we're probably missing out of the, of the building phase, which is probably where returns can be quite modest as well. So, I think if we're a bit more patient there, we can probably get a better entry and get some, get our money working for us faster. I guess that's what I'm saying. Because oftentimes when you do, even if you can jag the lows, you might be sitting in there for a few months building before it gets going. So let's stop trying to pick the lows there. Let's wait for the base to be built. Let's enjoy the meaty part of the ride.
Well, that's one way to work the markets, and definitely in this current cycle. There's a video on screen now if you want to see some more of Gary's setups, where he goes into a bit more detail to how he's using these exact strategies. Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.